Hello and welcome to today's webinar, Understanding Form 2290, Heavy Highway Vehicle Use Tax. I see it's the top of the hour. We're glad you've joined us today. My name is Marcia Norris, and I am a Senior Tax Analyst with the Internal Revenue Service. I will be your moderator for today's webinar, which is slated for approximately 120 minutes. This webinar offers 2 IRS continuing education credits. Participants earn 2 IRS CE credits with a related certificate of completion by attending the live broadcast of the webinar for at least 100 minutes after the official top of the hour start time and answering at least 4 polling questions during the live broadcast. The polling question example to test your pop-up blocker will count as an attendance check towards the polling question's response requirement. Before we begin, if there is anyone in the audience that is with the media, please send an email to the address on the slide. Be sure to include your contact information and the news publication you're with. Our media relations and stakeholder liaison staff will assist you and answer any questions you may have. As a reminder, this webinar will be recorded for future posting. Please note, continuing education credit or certificates of completion are not offered if you view any version of our webinars after the live broadcast. As a reminder, this webinar will be recorded for future posting. Please note, continuing education credit or certificates of completion are not offered if you view any version of our webinars after the live broadcast. We hope you won't experience any technology issues, but if you do, this slide shows helpful tips and reminders. We've posted a technical help document you can download from the materials section on the left side of your screen. It provides the minimum system requirements for viewing the webinar, along with some best practices and quick solutions. If you completed and passed your system check and you're still having problems, try one of the following. First, close the screen where you're viewing the webinar and simply relaunch it. Second, click on Settings on your browser viewing screen and select HLS. You should have received today's PowerPoint as a reminder email, but if not, no worries. You can download it by clicking on the Materials drop-down arrow on the left side of your screen, as shown on this slide. To receive our survey at the end of this presentation, you need to have your pop-up blocker disabled. We've also included several technical documents that describe how you can disable pop-up blockers based on the browser you are using, and that's also on the Materials tab. Closed captioning is available for today's presentation. If you're having trouble hearing the audio through your computer speakers, please click the Closed Captioning drop-down arrow located on the left side of your screen. This feature will be available throughout today's webinar. If you have a topic-specific question today, and we hope you do, please submit it by clicking the Ask Question drop-down arrow to reveal the text box. Type your question in the text box and ensure you click Send. Now, this is very, very important. Please do not enter any sensitive or taxpayer-specific information in that text box. During the presentation, we'll take a few breaks to check in with you and engage. At those times, a Pollings type feature will pop up on your screen with a question and multiple choice answers. Please select the response you believe is correct by clicking on the radio button next to your selection and then click Submit. If you do not get the polling question, this may be because you have your pop-up blocker on. So please, take a moment to disable your pop-up blocker now so you can answer the questions. We've included several technical documents that describe how you can disable pop-up blockers based on the browser you are using. We have documents for Chrome, Firefox, Microsoft Edge, and Safari for Mac users. You can access them by clicking on the Materials drop-down arrow located on the left side of your screen. We're going to take some time to test the polling feature. Here's your opportunity to ensure your pop-up blocker is not on so you can receive the remaining polling question throughout today's presentation. Okay, audience, this example polling question will count towards the polling questions requirement to earn CE credit. So here goes. Do you know who your local stakeholder liaison is? Answer A for yes, B for no, or C, what is a stakeholder liaison? Take a moment and click the radio button that corresponds to your answer. I'll go ahead and give you a few more seconds to make your selection. Do you know who your local stakeholder liaison is? A for yes, B for no, C, what is stakeholder liaison? Okay, we're going to stop the polling now. Let's see how the majority of you responded. I see that 52% of you chose no. For those of you who selected A or C, for those of you who selected no, as you did, we'll share with you throughout today's presentation so that you can have the response for future webinars. We hope you received the polling question and you're able to submit your answer. If not, now's the time to please check your pop-up blocker to make sure you have it turned off. Again, we've included several technical documents that describe how you can disable pop-up blockers based on the browser you are using. Just click on the Materials drop-down arrow located on the left side of your screen. That will download the document that fits your browser. Again, welcome. We're happy you've joined us. Before we move along with our session, let me make sure you're in the right place for today's webinar. The webinar today is Understanding Form 2290, Heavy Highway Vehicle Use Tax. This webinar is scheduled for approximately 120 minutes from the top of the hour. Now, let me introduce today's speaker. We're joined by stakeholder liaisons Jeffrey Latessa and Christopher Green with the Internal Revenue Service Communications and Liaison Division. Jeffrey joined the IRS in 2008. Prior to joining the Communications and Liaison Division, Jeffrey worked as a lead case advocate with the Taxpayer Advocate Service and in Identity Theft Victim Assistance. He has a bachelor's degree in communications from the University of Massachusetts at Amherst and also a Juris Doctor from the University of Connecticut School of Law. Christopher has 15 years of experience in the banking industry, working with consumer and business account owners to achieve economic success and financial security. Furthermore, he has several years of tax prep services. Christopher is an alumnus of Bowie State University, where he obtained a bachelor's degree in business with a concentration in accounting. Let's give a virtual welcome to Jeff and Christopher. And with that, I'm going to turn it over to Christopher to begin today's presentation. Christopher, the floor is yours.
Thank you, Marcia, for that wonderful introduction, and thanks again to all of our attendees for joining us today. Today we will be reviewing Form 2290 filing requirements, Form 2290 due dates, Form 2290 e-filing requirements, and the heavy highway vehicle use tax payment options. But before I jump into those topics, let me give you a quick overview of the Heavy Highway Vehicle Use Tax. The Heavy Highway Vehicle Use Tax is a federal excise tax which collects over $1 billion a year. The taxes that are collected go into the Department of Transportation's Highway Trust Fund, which is used to finance most federal government spending on highways and mass transit projects. If you would like to know more or learn more about the Highway Trust Fund and get a little bit more information, you can find out using the link that is shown at the bottom of this slide. Now, continuing our discussion. The Heavy Highway Vehicle Use Tax applies to highway motor vehicles, which include self-propelled vehicles designed to carry a load over the public highways. These are typically tractors, trucks, and buses used on public roads in the U.S. Now, the tax is assessed only on highway motor vehicles with a taxable gross weight of 55,000 pounds or more. You would use the Form 2290 to figure and pay the tax due on these vehicles. Now, just like you pay your homeowners or car insurance in advance for coverage for the entire year, the Form 2290 and any associated payments are also filed and paid in advance. Now, you might be wondering, does the tax apply to vehicles that are not registered and are used strictly for off-road purposes? The answer is no. The tax does not apply to vehicles that are not registered and that are used strictly for off-road purposes. For example, an unregistered highway tractor used only on job sites that is trailered from job site to job site would not be subject to the Heavy Highway Vehicle Use Tax. Something that is commonly asked is whether the term taxable gross weight is the same as gross vehicle weight. And the answer to that is no. Taxable gross weight is not the same as gross vehicle weight. We'll go over in detail the difference between taxable gross weight and gross vehicle weight. But before we do, let's look at some additional circumstances in which you would use Form 2290. And here are some reasons why we would use Form 2290. To claim suspension from the tax when a vehicle is expected to be used 5,000 miles or less, or 7,500 miles or less for agricultural vehicles during the period. Or you may also claim a credit for tax paid on vehicles that were destroyed, stolen, sold, or used 5,000 miles or less, 7,500 miles or less for agricultural vehicles. Or you may use the Form 2290 to figure and pay the tax due on a used taxable vehicle acquired and used during the period. Now, this is not on the slide, but you will also use Form 2290 to report the acquisition of a used taxable vehicle for which the tax has been suspended. Let's discuss taxable gross weight. To determine a vehicle's taxable gross weight for purposes of computing the Heavy Highway Vehicle Use Tax, you take three things. Number one, the actual unloaded weight of the vehicle fully equipped for service. Two, the actual unloaded weight of any trailers or semi-trailers fully equipped for service customarily used in combination with the vehicle. And finally, the weight of the maximum load customarily carried on the vehicle and any trailers or semi-trailers customarily used in combination with the vehicle. Then add them all together, and that is the taxable gross weight of the vehicle. Now remember, there can be a difference between the weight of the maximum load customarily carried on the vehicle, which impacts the taxable weight of vehicle weight, and the maximum gross vehicle weight, rating assigned by the manufacturer, which can be higher. This is very important, again, because vehicles are taxed based on taxable gross weight of the vehicle and not the gross vehicle weight rating as assigned by the manufacturer. Now let's take a look at an example here. The weight declared for registering a vehicle in a state may affect the taxable gross weight used to figure the tax. Where there is an international registration plan, which we will refer to as IRP registration, which requires a declaration of gross weight as a specific amount, the vehicle's taxable gross weight must be no less than the highest gross weight declared for the vehicle in any state. If the vehicle is a tractor-trailer or truck-trailer combination, the taxable gross weight must be no less than the highest combined gross weight declared. On this sanitized example of an IRP, if you look closely, you can see the weight declarations for each state the vehicle was proportionately registered. As such, the taxable gross weight would have to be at least 80,000 pounds, which is the highest gross weight declared for the vehicle in any state. The A, B, and BC shown on the lower left of the slide are Alberta and British Columbia, which are Canadian provinces and are not part of the United States and are not U.S. states. As the IRP's registration or highest listed gross weight used for the state of Illinois registration purposes is 80,000 pounds, the 80,000 pounds weight would be the vehicle's taxable gross weight. As such, the taxable gross weight would fit in a category V on the Form 2290, sections of which are now being shown on your screen. Category V is for vehicles with a taxable weight of over 75,000 pounds. Here's something to consider. Let's say you perform the taxable gross weight calculation, as I previously discussed, and that weight is higher from the weight listed on the IRP registration. Which weight do you use for 2290 purposes? The answer is this. If the computed taxable gross weight is higher, then you use that number. Remember, where there is an IRP registration, which requires a declaration of gross weight as a specific amount, the vehicle's taxable gross weight must be no less than the highest gross weight declared for the vehicle in any state. This slide shows a state schedule for fiscal year registration fees due for a vehicle registered on the basis of a gross weight category. It shows the gross vehicle weight categories for state registration purposes, which is what we're going to focus on. In this example, the vehicle's taxable gross weight for 2290 filing purposes must fall within the highest gross weight category for which the vehicle is registered in that state. If a taxpayer requested a plate type V, their taxable gross weight must fall within 64,001 to 73,280 pound range. The taxpayer would use this weight as the taxable gross weight reported on Form 2290 based on the weight of the maximum load customarily carried on the vehicle and on any trailers or semi-trailers customarily used in combination with the vehicle for state registration purposes. Here is a closer look at the state registration fee table based on gross weight category. Again, if a taxpayer requested plate type V, their taxable gross weight must fall within 64,001 to 73,280 pound range, which is highlighted on your screen. Remember that the state registration used a weight category that ranged from 64,001 to 73,280 pounds. The amount reported on Form 2290 could fall anywhere within the Form 2290 categories K through T, shown on the slide. Before we move on, Marcia, I think now is a good time to check in with a polling question.
Good idea, Chris. You got it. Audience, it's time for our first polling question. Take a moment and click the radio button that best answers the question. So here goes. When would you use Form 2290? Is it A, to pay tax on highway motor vehicles over 55,000 pounds taxable gross weight? B, to claim suspension for tax? C, to pay tax on recently purchased used vehicles? D, to claim an allowable credit for previously paid highway use tax? Or D, is it all of the above? Take a moment and click the radio button that best answers the question. If you do not receive the polling question, please enter only the letters A, B, C, D, or E that corresponds with your response in the Ask Question text box. Your response will be timestamped. Please answer your question, the question as asked, A, B, C, D, or E. Okay, so we will stop the polling now and see what the answer is on the next slide. So the correct response is E, all of the above. And I see that 86% of you responded correctly. That's a wonderful correct response rate. Thank you so much for participating. Chris, I'll turn it back over to you.
Thanks, Marcia. Sounds like our audience is listening in. So let's move on. To determine a vehicle's taxable gross weight for purposes of computing the heavy highway vehicle use tax on a vehicle registered only in a state or states that base registration on actual unloaded weight, you take three things. You must take the actual unloaded weight of the vehicle fully equipped for service and the actual unloaded weight of any trailers or semi-trailers fully equipped for service customarily used in combination with the vehicle, and finally, the weight of the maximum load customarily carried on the vehicle and any trailers or semi-trailers customarily used in combination with the vehicle. Then you add them all together, and that is the taxable gross weight of the vehicle. Hey, Jeff, I'll hand things over to you now.
Thanks, Chris. So the Form 2290 must be filed by the person in whose name the vehicle is registered or should be registered. State law determines who must register the vehicle. It's important to note that the name on the vehicle's registration might not be the owner of the vehicle. So it's possible that the owner of the vehicle will not be the person filing the Form 2290 or paying the heavy highway vehicle use tax. The tax period for the heavy highway vehicle use tax is July 1st through June 30th and covers the upcoming tax period or the remainder of the upcoming period if filed for a partial year. Form 2290 must be filed by the last day of the month following the month of first use. As we mentioned in the previous slides, the tax is paid at the time the 2290 is due. The heavy highway vehicle use tax is a graduated tax, meaning the heavier the taxable gross weight, the more tax is owed. The heavy highway vehicle use tax for a full year ranges from $100 to $550, and the tax is prorated for partial years. Next, I'll show how the 2290 filing due dates work. But before I talk about the due dates, there's an important point to remember when filing Form 2290. The filing deadline is not tied to the vehicle registration date. So regardless of the vehicle's registration renewal date, taxpayers must always file Form 2290 by the last day of the month following the month in which the taxpayer first used the vehicle on a public highway during the taxable period. The chart on the screen now is a snapshot of the when to file Form 2290 chart, which you'll find in the Form 2290 instructions. As I mentioned, the filing season for Form 2290 filers is July 1st through June 30th. The Form 2290 must be filed by the end of the month following the month the vehicle was first used on a public highway during the taxable period. So for example, if the vehicle is first put into use in July of the taxable period, the Form 2290 must be filed between July 1st and August 31st. Even when the Form 2290 is filed for a partial year, the same rules apply. So for example, if a vehicle is first put into use in October of the taxable period, the Form 2290 must be filed between October 1st and November 30th. So another common question that we receive is, what if the Form 2290 filing due date falls on a weekend or a holiday? And the answer is, if the due date falls on a weekend or a holiday, the return needs to be filed by the next business day. So for the next few minutes, I'm going to go over some examples of when you would file a Form 2290. So in example 1, John Maple owned and registered a vehicle he first used on a public highway on July 2nd, 2025. And the vehicle weighed 80,000 pounds. Since John first used his vehicle on a public highway on July 2nd, 2025, he will have to file a Form 2290 by August 31st, 2025. His tax period would be July 1st, 2025 through June 30th, 2026. Now here's the first page of John's Form 2290. Part 1 of the form shows the $550 tax liability associated with the vehicle during the tax period July 1st, 2025 through June 30th, 2026. Now we'll show how that $550 tax liability was calculated. This is the tax computation page of the Form 2290. It shows that John Maple is being taxed on one vehicle, classified under Category V, with a taxable gross weight of 80,000 pounds. Here you can see where the vehicle is taxed at $550 for the period July 1, 2025 through June 30th, 2026. This $550 is the same amount shown on the first page of the 2290, which we saw on the previous slide. Here is John's Schedule 1. You can see the VIN of the one vehicle John first used on public roads in July 2025. Again, the tax period is July 1st, 2025 through June 30th, 2026. So in summary, the heavy highway vehicle use tax is reported on the first page of the Form 2290. The tax computation is shown on page 2 of the Form 2290. And the vehicles being reported are listed by VIN on Form 2290, Schedule 1. So next I have another example. Now this is example 2, and in this example we'll show how to file a Form 2290 for the partial period tax year. John purchased a new vehicle in November 2025 and first used it on a public highway on November 2nd. In example 1, you'll recall that John filed a Form 2290 for his vehicle that he first used on a public highway in July 2025. Now, he must file another Form 2290 reporting the new vehicle by December 31st, 2025, for the period beginning November 1st, 2025 through June 30th, 2026. Now, how does John figure out that tax? In order to do that, he would use the partial period tax table 1. Here's the first page of Form 2290. Part 1 of the form shows the summary of the tax liability associated with the new vehicle during the partial tax period November 2025 through June 30th, 2026. If you notice line 1, it's input as 202511, meaning year 2025, and 11 for the month you first used the vehicle, which in this case is November. Now we will go to the tax computation page to show how the numbers on this page of Form 2290 were calculated. Here's the second page of the 2290, which is the tax computation page. It shows that John Maple is being taxed on one vehicle with a gross weight of 77,000 pounds. Here you can see the tax amount for the vehicle which is being taxed for the partial year. The $366.67 is the same amount shown on the first page of Form 2290, which we saw previously. Okay, so where does the tax amount on this page come from? It comes from the partial period tax table, which we'll show you in the next slide. This slide shows the partial period tax for the vehicle which was first used in November. The partial period tax table can be found in the Form 2290 instructions. To determine the tax, look up the category, in this case, category V, then go over to the first month of use, which is November. You'll find the tax amount for this vehicle, which is $366.67. The tax amount is then put on two places of the Form 2290. One, the tax computation page, and two, Part 1 of the Form 2290. Here is John's Schedule 1 for his new Form 2290. You use Schedule 1 to record the VIN of each vehicle being reported. You can see the VIN of the new vehicle John first used on the public roadways for the partial tax period November 2025 through June 30th, 2026. So to summarize this example, you use the partial period tax table to determine the amount of tax. The tax amount is placed on the tax computation page of the Form 2290. The heavy highway vehicle use tax is reported on the first page of Form 2290 in Part 1, figuring the tax. And the VIN number of the vehicle used in November is listed on Form 2290, Schedule 1. We have another example, but before I hand things over to Chris for the next example, I think now would be a good time for another polling question.
Sure thing, Jeff. Thank you. Okay, audience, it's time for another polling question. So here goes. What is the taxable period for Form 2290? Is it A, January 1 through December 31, B, April 1 through March 31, C, July 1 through June 30 of the following year, or D, October 1 through September 30? Take a moment and click the radio button that best answers the question. If you do not receive the polling question, please enter only the letter A, B, C, or D that corresponds with the response in the Ask Question text box. Your response is time-stamped. So answer the question, what is the taxable period for Form 2290, A, B, C, or D? I'll give you a few more seconds to make your selection and or submit your answer in the Ask Question feature. Okay, we're going to stop the polling now, and let's share the correct answer on the next slide. And the correct response is C, July 1 through June 30 of the following year. And I see 85% of you responded correctly. That's another great correct response rate. Seems like we're all off to a great start and you're paying attention. Chris, I believe it's your turn to have the floor. The mic is yours.
That's correct, Marcia. So audience, are you ready for our third example? Here it goes, example number 3. In this example, Susan Pine has 4 vehicles which are first used on a public highway in 2025 July. All 4 vehicles are required to be registered in their name. Susan must file one Form 2290 before August 31st, 2025. Remember, Form 2290 must be filed by the last day of the month following the month in which you first used the vehicle. Since the vehicles were used on a public highway during July 2025, Susan enters 2025-07 or 202507 on line 1 of Part 1, figuring the tax. The tax computed for the 4 vehicles is $1,850. Let's work through how we came up with that figure. Okay, let's go through the tax computation. Susan had 1 truck under Category K, and the amount of tax for that truck is $320. She had another truck under Category P, and the amount of tax is $430. And finally, Susan had 2 trucks under Category V with a total tax of $1,100 or $550 for each truck. The total tax for the 4 trucks shown on the tax computation page is $1,850. This Schedule 1 shows the VINs, or vehicle identification numbers, for all 4 trucks put in service in July by Susan. Remember to input the VIN for each category of vehicle. You have to attach the Schedule 1 to Form 2290. Now let's go to the example 3A. And here we are. Let's walk through another example of completing Form 2290. David Elm used vehicles on the public highway in July and August. Therefore, David has to complete 2 separate Form 2290s. We'll walk through completing both Form 2290s now. David first used 4 vehicles on a public highway in July. The tax for these 4 vehicles is $1,808. We'll work through how we came up with that figure on the next slide. And here it is, folks. Here is the tax computation. David has 2 vehicles with taxable gross weight of 67,000 pounds each, which makes them Category M vehicles. The amount of tax is 364 times 2, $364, which totals $728. He also had 2 vehicles with taxable gross weight of 75,000 pounds, which makes them Category U vehicles. The total tax is $540 times 2, which is $1,080. The total amount of tax for 4 vehicles on page 2 is $1,808. We simply add $728 for 2 vehicles plus $1,080 for the remaining 2 vehicles, and the total is $1,808. Now this point is key. Don't forget to add the number of vehicles in column 3A and put it on the total line. So let's look at David's Schedule 1. The tax year is the month David first used the trucks on the road, which was July, so that makes the tax year 2025-07 or 202507. David put 4 trucks in use in July, so be sure to notate each VIN and their corresponding category. That's 2 VINs with Category M and 2 VINs with Category U. In the next example for David, remember that he had vehicles that he put in use in July and August? We just completed Form 2290 for July. So let's look at the 3 vehicles David first put on the highway in August. The tax for these 3 vehicles is $1,001.01. Let's see how it's computed. Since David first used these 3 vehicles on the highway in August, David will use the partial period tax table to compute the tax. Each of the 3 trucks had a taxable gross vehicle weight of 66,500 pounds. In this case, all 3 vehicles fall under Category M. On the tax computation page, you would put 3 in column 2A for the number of vehicles. The partial period tax is $1,001.01. Let's go to the partial period tax table to see how he arrived at that computation. Okay, here is the partial period tax table found in 2290's instructions. We would look at Table 1 for this example, vehicles except logging. Go to August 11 column. Since that is the month the trucks were first used on the highway, come down to Category M, and you'll see it shows as a tax of $333.67. Since there were 3 vehicles for the month, we would multiply $333.67 by 3, and that's how we get a total of $1,001.01. Now let's look at the Schedule 1 for these 3 trucks. The VIN of all 3 vehicles are listed along with their category, which in this case is M, and you see the month of first use is 2025-08 or 202508. Keynote alert. Don't forget, Schedule 1 must be attached to Form 2290 or your return may be rejected. Hey, Marcia, I think now would be a good time for another polling question.
Chris, I agree. Okay, audience, here is our next polling question. Select the option that best answers. By what date does Form 2290 need to be filed? By what date does Form 2290 need to be filed? Is it A, by the last day of the month following the month in which you first used the vehicle? B, by the last day of the month, by the last day of the same month in which you first used the vehicle? C, the same day you first used the vehicle? Or D, by the last day of each calendar quarter? Take a moment and click the radio button that best answers your question. If you do not receive the polling question, please enter only letter A, B, C, or D that corresponds with your response in the Ask Question text box. Your response is timestamped. I'll give you a few more seconds to make your selection and/or submit the answer in the Ask Question feature. What is the date? By what date does Form 2290 need to be filed? A, B, C, or D? Okay, we're going to stop the polling now, and let's share the correct answer on the next slide. And the correct response is A, by the last day of the month following the month in which you first used the vehicle. And I see 85% of you responded correctly. That's a fantastic job. Thank you for continuing to hang in there with us. Jeff, I'll turn the mic over to you to continue.
Thanks, Marcia. Okay, so on this slide, we're going to look at how you would compute the refund amount for a vehicle that was sold during the tax year and the tax was fully paid by the original owner prior to the sale. So in July 2025, Mary paid the full tax of $550 for her 80,000-pound taxable gross weight truck. Charles purchased the truck from Mary in September 2025 and drove it on a public highway in September 2025. Since Mary had paid the full tax of $550 for the tax period July 2025 through June 2026 and did not use it for the entire tax period, Mary can claim a credit or refund of the tax paid for the 9 months she did not use the truck after it was sold. This screen shows the last 4 digits of the vehicle identification number, or VIN, of the truck that Mary sold to Charles along with the month it was first used, its category, which is V, and the amount of tax paid, which in this case is $550. The amount of Mary's refund is computed by dividing the number of months she did not use the truck, which in this case were October 2025 through June 2026, which is 9, by the full 12-month tax period, which in this case would be July 2025 through June 2026, and multiplying it by the amount of tax paid. This amount is $412.50, which is the amount of refund that Mary is entitled to claim. Next, I'm going to go over one final example. This is example 4, our last example. In this example, Tupelo Company had 11 vehicles it first used on a public highway in July 2025. They also had 1 vehicle that had the tax suspended. This screen shows the last 4 digits of the VINs and each vehicle's taxable gross weight. The highlighted VIN is the tax suspended vehicle. It has a taxable gross weight of 72,000 pounds, and its category is W. Tupelo Company checked the box on Form 2290 that stated that the vehicle with VIN ending 9810 was to be used for short local deliveries and was expected to be used 5,000 miles or less during the July 1, 2025 through June 30th, 2026 tax period. Please note that during the tax period, July 1, 2024 through June 30th, 2025, the same vehicle was used 5,000 miles or less. Let's see how all 11 of Tupelo Company's vehicles are reported on Form 2290 for the tax period July 1, 2025 through June 30th, 2026. Here's the first page of Form 2290. Part 1 of the form shows the summary of the tax liability associated with all of Tupelo Company's vehicles during the tax period July 1, 2025 through June 30th, 2026. Total tax is $4,600 $746. Tupelo Company will have to complete Part 2 of Form 2290, which is the statement in support of suspension. Part 2, statement in support of suspension, will show how to report vehicles that are expected to travel 5,000 miles or less on public roads, and because of this, the heavy highway vehicle use tax is suspended on that vehicle. Also, Part 2 is where Tupelo Company certifies that the vehicle did not travel more than 5,000 miles on public roads during the prior taxable period, which would be July 1, 2024 through June 30th, 2025. Now we'll go to the tax computation page to show how the numbers on this page of Form 2290 are calculated. This is the tax computation page of Form 2290. It shows that Tupelo Company reported 11 vehicles, 10 of which are taxed at various rates based on the weight categories. Here you can see where the tax for the 10 vehicles totals $4,746 for the period July 1, 2025 through June 30th, 2026. This $4,746 is the same amount shown on the first page of 2290, which we saw on the previous slide. It also reflects one tax suspended vehicle, which is category W. This is the Schedule 1, where the VIN of each of the 12 vehicles being reported by Tupelo Company for the tax period July 1, 2025 through June 30th, 2026 are listed, including the suspended vehicle. Okay, so I want to pause here for another quick check-in with a polling question.
You got it, Jeff. Audience, here is our fourth polling question. Which of the following is needed prior to filing Form 2290? Is it A, the vehicle identification number, the VIN, of each highway motor vehicle? Is it B, taxable gross weight of each vehicle? C, the employer identification number, EIN? Or is it D, all of the above? Take a moment and click the radio button that best answers the question. If you do not receive the polling question, please enter only the letter A, B, C, or D that corresponds with your response in the Ask Question text box. Your response is time-stamped. Which of the following is needed prior to filing Form 2290? I'll give you a few more seconds to make your selection and or submit the answer in the Ask Question feature. Okay, we're going to stop the polling now and let's share the correct answer on the next slide. And the correct response is D, all of the above. I see that 97% of you responded correctly. Wow. That's another great correct response rate. Jeff, I will hand it back over to you to discuss the filing of Form 2290.
Thanks, Marcia. All right, so now let's look at what you need to do prior to filing your Form 2290. Here's the information that you need to gather in advance. So you'll need an employer identification number or an EIN. You cannot use your Social Security number. You'll need the vehicle identification number or VIN for each vehicle you're reporting. And you'll need the taxable gross weight of each vehicle. Now, one common question that we often get is what to do if you don't have an EIN. So if you don't already have an EIN, you can go to irs.gov and apply for one. And it will take up to 4 weeks for your new EIN to be fully integrated in our systems. Now, it's important to note that when you get your EIN, you want to use the name exactly as shown on your EIN application. The reason this is so important is that an e-filed return will reject if the name the IRS has on record for your EIN does not exactly match the name on the e-filed Form 2290. That's what we call a name control mismatch. The name control for the business is the first 4 characters of your business name. If you use your own name rather than a business name, your name control will be the first 4 letters of your last name. And if your last name has fewer than 4 characters, such as Jane Doe, then the name control would be DOE in that example. All right, so once you've gathered all the information that you need to file the Form 2290 and the Form 2290 Schedule 1, you can now complete the Form 2290. Now to do so, you would input the filer's information, indicate the type of return being filed, figure the tax, include a statement in support of suspension if applicable, and very important, you want to make sure that you sign the return. Now there are 2 ways you can file Form 2290. You can e-file it or you can file it by mail. We encourage everyone to e-file. It's the preferred method, but e-filing 2290s is required if you're reporting 25 or more taxed vehicles. Tax suspended vehicles, which, as you remember, are designated by Category W, aren't included in the electronic filing requirement for 25 or more vehicles because you aren't paying tax on them. Now, what's the advantage of e-filing? You'll receive your IRS receipted watermarked Schedule 1 within a few minutes, which allows you to immediately register the vehicle and get on the road. Now, however, if you choose to paper file and are mailing the return with or without full payment, use the appropriate mailing address listed in the Form 2290 instructions. And you should expect to receive your IRS receipted stamped Schedule 1 up to 6 weeks after the IRS receives the Form 2290. Now, part of filing Form 2290 includes completing the Form 2290 Schedule 1, which is the schedule of heavy highway vehicles. You're required to report each individual vehicle by its vehicle identification number, or VIN, V-I-N. You report both taxed vehicles and tax suspended vehicles by VIN. For those of you who might not be familiar with tax suspended vehicles, tax is suspended for vehicles used 5,000 or fewer miles, and for agricultural vehicles use 7,500 or fewer miles on public highways. Mileage use limit means the use of a vehicle on U.S. public highways 5,000 miles or less, or 7,500 miles or less for agricultural vehicles. The mileage use limit applies to the total mileage a vehicle is used during a period, regardless of the number of owners. So I want to stop here for a moment and address a common mistake people make related to the Form 2290. The heavy highway vehicle use tax is assessed on the vehicle. This is why you report each vehicle using the vehicle identification number or VIN of each separate vehicle on the Form 2290. The heavy highway vehicle use tax does not follow the name on the registration. So, for example, let's say you purchase a new truck and trade in an old truck and transfer the registration from the old truck to the new truck. You will still have to file a Form 2290 for the new truck, even though the registration of the vehicle from the old truck was transferred to the new vehicle. Now, another common question that I want to address: is the IRS receipted Form 2290 Schedule 1 the proof of payment needed to register the vehicle with your State Department of Motor Vehicles? And the answer to that is correct. An original copy of the IRS receipted Schedule 1 is generally needed to register a vehicle. We'll talk about how to get a stamped Schedule 1 in a minute. Now here's a picture of the upper part of the Form 2290 Schedule 1. This is where you would input the vehicle identification numbers and enter the categories of the vehicles. Taxable vehicles are categorized A through V based on the vehicle's taxable vehicle weight and whether or not the vehicle is a logging vehicle. Separately, tax-suspended vehicles are categorized as W. The different taxable weight categories are listed right on the Form 2290. Now, I previously mentioned that an IRS receipted Form 2290 Schedule 1 is the proof of payment needed to register your vehicle with your State Department of Motor Vehicles. However, there is an exception to the requirement of having to present a receipted Schedule 1 to your state DMV in order to register a vehicle. It's called the 60-day rule. Now, under the 60-day rule, a State Department of Motor Vehicle may register a new or used vehicle without a receipted Schedule 1, provided the original or copy of the bill of sale is presented to the DMV, showing the vehicle was acquired within 60 days of registering the vehicle. This rule allows drivers to operate on the road immediately without having to wait for a receipted Schedule 1 from the IRS to provide to their DMV. Now, unfortunately, there are instances where the 60-day rule creates problems for vehicle owners. The problem is that when vehicles are registered without using a receipted Form 2290 Schedule 1, it's not uncommon for vehicle owners to forget to file the Form 2290 for the newly purchased vehicle and pay the associated tax. So it's very important to remember that if you register a vehicle without using the Form 2290 Schedule 1, that the Form 2290 must still be filed and the related tax must be paid. Now, the second item on the slide deals with a common question that we often receive, which is what happens if the vehicle is registered in July, August, or September? And the answer is there is a special rule for registrations that occur during the months of July, August, and September. If the state receives your application for registration of your highway motor vehicle during the months of July, August, or September, you may provide the previous taxable period's receipted Schedule 1 that was returned to you by the IRS as proof of payment. Remember to file Form 2290 for the current period by the due date of the return. Now, Chris, I'll hand things over to you now.
Absolutely, Jeff. Let's keep on trucking. I want to re-emphasize the main benefit of e-filing 2290s, which is that the IRS will provide you a watermark Schedule 1 within minutes of accepting your e-filed Form 2290. With paper-filed 2290s, it could take up to 6 weeks to get your IRS stamped Schedule 1 in the mail. When you e-file Form 2290, the watermark Schedule 1 can be quickly presented to your State Department of Motor Vehicles in order for you to register the vehicle, which allows you to get on the road sooner. When you e-file Form 2290, the watermark Schedule 1 can be easily presented to your State Department. So e-filing also saves you time, especially when filing for multiple vehicles, and it reduces errors that are commonly found in paper-filed 2290s. Marcia, can we give the audience another polling question, please?
Yes, we sure can. Audience, this polling question is a true or false response. So here goes. E-file is the preferred filing method for all taxpayers, regardless of the number of vehicles reported. E-file is the preferred filing method for all taxpayers, regardless of the number of vehicles reported. Is it A, true, or B, false? Take a moment and click the radio button that best answers the question. If you do not receive the polling question, please enter only the letter A or B that corresponds with the response in the Ask Question text box. Your response is time-stamped. Go ahead and answer the question true or false. I'll give you a few more seconds to make your selection and or submit the answer in the Ask Question feature. Okay, we're going to stop the polling now, and let's share the correct answer on the next slide. And the correct response is A for true. Audience, thank you for remaining so engaged with this topic. I see that 91% of you responded correctly. Chris, it looks like we got another great response rate. The mic is all yours.
91%. That's great to hear. This is awesome, folks. Thank you so much for staying with us today. Continuing on, to find an e-file provider, visit the Trucking Tax Center at irs.gov/trucker, which is shown on the screen, and select e-file form 2290. At this webpage, you can review the list of participating commercial software providers and select the one that best meets your needs. Keep in mind that the services offered and fees charged differ by provider. Once you choose a 2290 e-file provider, follow the prompts to electronically file your return and how to receive your receipted Schedule 1. Next, I will talk about paying the heavy highway vehicle use tax. Okay, so you have e-filed your 2290. Now let's talk about paying the heavy highway vehicle use tax. There are multiple ways to electronically pay. Number one, electronic funds withdrawal during the e-file process. It's safe and easy. And the funds can be withdrawn from either your checking or savings account. Electronic funds withdrawal is probably the quickest and easiest way to pay the heavy highway vehicle use tax. Or you could use the Electronic Federal Tax Payment System, also known as EFTPS. It's also safe and easy to use. The added benefit of using EFTPS is that you can pay other types of federal taxes through this system as well. You will need to be enrolled in EFTPS to use it, which, if you are not already, takes about 5 to 7 business days. Keep that in mind when you file your Form 2290 and it's coming up on your due date and that payment's right around the corner. The third option, maybe you like to use that one. Using a credit card or debit card, you can pay the heavy highway vehicle use tax also. You can pay by internet, phone, or mobile device, whether you e-file or mail in your return. Now you may be wondering, how do I enroll in the Electronic Filing Payment System, or EFTPS? The simplest and quickest way to enroll in EFTPS is by enrolling at the EFTPS website. You would visit www.eftps.gov. Now, alternatively, you can call EFTPS customer service at 1-800-555-4477. And again, 1-800-555-4477. to request an enrollment form. There are also EFTPS phone numbers for the hearing impaired and for Spanish speakers. But again, the fastest and easiest way to enroll in EFTPS is enrolling at the EFTPS website. This method is efficient and it's safe. Remember, EFTPS. For more information on all of your payment options, visit irs.gov and select the Pay button. Since we're in the midst of the Form 2290 filing season, let me review some tips for you. Be sure to use the correct year's tax return and do not alter the tax period printed at the top of Form 2290 or Schedule 1. You may file on paper as soon as the July 2025 Form 2290 and instructions are available on irs.gov. And guess what? These forms are now available. Continuing on, please note that Form 2290 e-file started on July 1st, and you are required to e-file if you are reporting 25 or more taxed vehicles on your Form 2290. You can pay the heavy highway vehicle use tax using electronic funds withdrawal, the electronic federal tax payment system, commonly referred to by its acronym EFTPS, or by credit card, by check, or money order. Okay, so let's review some common 2290 resources available from the IRS. As previously mentioned, the Trucking Tax Center, with its easy-to-remember internet address, which is irs.gov/trucker, contains all of the information you need to file. This information is also available in Spanish. In fact, most irs.gov articles about the heavy highway vehicle use tax are available in both English and Spanish, including the Trucking Tax Center. At the top right of each English language page, you'll see an Espanol link for our Spanish-speaking counterparts. Additionally, we have publication 4900 or 4900 available. This publication talks about e-filing and e-paying your heavy highway vehicle use tax, and it is also available in Spanish. And with that, I'll hand things back over to Marcia now.
Thank you so much. Hello again. We've come to our live Q&A. I'll be moderating the Q&A session, but before we start, I want to thank everyone for attending and staying engaged during today's presentation, Understanding Form 2290, Heavy Highway Vehicle Use Tax. Earlier, I mentioned we want to know what questions you have for our presenters. Now, here's your opportunity. If you haven't already input your questions, there's still time to do so. Go ahead and click on the drop-down arrow next to the Ask Question field, type in your question, and simply click Send. For our Q&A portion, we are joined today by Brian Brocious. Brian is an excise tax policy analyst. He's currently serving as the subject matter expert for the Heavy Highway Use Tax Form 2290. The retail truck tax, also highway type tire taxes, and taxes on foreign insurance. One thing before we get started, we may not have time to answer all your questions. Because questions are submitted, we will just take the amount of time that is allowed to answer them. So let's get started so that we can answer as many questions as possible. Brian, are you ready for our questions that our audience have for you?
I'm ready.
So the first question from our audience is, where can I find information about Form 2290?
Thank you for that question, and thank you to our audience for submitting your questions today. I've been watching the questions come in, and there are some great questions for us to get to. With this question, many answers to the questions that we will answer here today, as well as the answers to questions you may have in the future, can be found in the Form 2290 instruction document. So you will go to irs.gov and search 2290. I want to make note that the Form 2290 and the Form 2290 instructions are separate documents. It is also helpful to visit the Trucking Tax Center on irs.gov if you need further information.
Thank you for that, Brian. Here's another question from the audience. Why are we using July 1 through June 30 as the taxable period?
That's an easy question. Thanks for the setup. This tax was enacted in 1956, and at that time the government's fiscal year was July 1 through June 30. So the July 1 period has remained in place even though now the government's fiscal year has since changed.
Thank you for that response. Here is another question from the audience, Brian. Is the tax amount inflation adjusted? Is the tax amount inflation adjusted?
Actually, no. There's no current inflation adjustment for this tax.
Okay. Let me see here what others we have. Quite a few. Here's another, Brian. What is meant by proof of payment of the tax?
So the stamped or watermarked Schedule 1 Form 2290, you will often hear as referred to as proof of payment by the local DMVs when you're registering the vehicle. Schedule 1 of Form 2290 is used to report all vehicles for which you are reporting tax, including an increase in taxable gross weight, and those that you are reporting suspension of the tax by category and by vehicle identification number, the vehicle's VIN.
Awesome, awesome. Brian, the audience is asking if you can give some examples of vehicles with taxable gross weight over 55,000 pounds.
Sure can. Most commonly, these are going to be tractor-trailer combinations. They're going to be dump trucks, garbage trucks, and it may include large buses.
I see. A participant wants to know if the tax applied to motorhome RVs.
That's a great question. So there is no specific tax exemption for motorhome RVs, but it would be unlikely that a motorhome would exceed 55,000 pounds taxable gross weight, and so therefore it's going to be unlikely that a motorhome RV is going to be subject to the tax.
Thank you, thank you. There is a clarification sought by an audience member. They want to know if there are exempt uses or exempt users.
Great question. There are. So the exempt use of certain highway motor vehicles is exempt from the tax if the vehicle is used and actually, so that's the key, it's used and actually operated by one of these exempt users. So it would be the federal government, the District of Columbia, a state or local government, the American National Red Cross, a not-for-profit volunteer fire department, ambulance association, or rescue squad. We would exempt Indian tribal governments as well as mass transportation authorities exercised by a state. So those are exempt users. We have certain exempt vehicles, such as qualified blood collector vehicles. We have non-highway vehicles, such as our off-highway dump trucks. And we also have vehicles we refer to as mobile machinery. So an example of mobile machinery might be a 100-ton mobile crane. So that vehicle actually travels down the road, but it does not need the Form 2290 on it because it is exempt from tax.
Well, thanks for that comprehensive explanation, Brian. One attendant wants to know, what does first used mean? And they also want to know, what if the vehicle is used continuously?
Those are great questions. We see those come in a lot, so let's walk through them carefully here. So use means the use of a vehicle with power from its own motor on any public highway in the U.S. So if we are going to then clarify what a public highway is, that is any road in the U.S. that is not a private roadway. So that includes federal, state, county, and city roads under the term public highway. Form 2290 must be filed for the month the taxable vehicle is first used on public highways during the taxable period. So as an example, when you purchased your heavy truck from the dealer in July 2025 and drove it over a federal, state, county, or city road to your home, that drive home is your first taxable use of the vehicle for purposes of Form 2290.
Thank you for that great explanation, Brian. Here, another attendee wants you to explain what qualifies as a logging vehicle.
Sure. It may be helpful if after I distinguish the logging vehicles, then I'll just jump real quickly to an agricultural vehicle, and we can kind of have those same two together. The requirements are not something that you will probably memorize. So again, I'll refer you back to the Form 2290 instructions if, let's say, you're a paid provider and you're going to discuss this with your clients as to whether their vehicles qualify for logging or agricultural. So we'll just touch on those briefly here. A vehicle qualifies as a logging vehicle if it's used exclusively for the transportation of products harvested from the forested site, or it exclusively transports the products harvested from the forested site to and from locations on that forested site. And granted, if it's going between the forested site, it can use public highways. The key with the logging vehicle is the vehicle must be registered under the state laws as a highway motor vehicle used exclusively in the transportation of harvested products. So it's a distinction made at the state registration level on the vehicle. Products harvested from the forested site may include things such as timber that has been processed for commercial use by sawing into lumber, chipping, milling operations, if the processing occurs before transportation from the forested site. It's very technical, which again is why I would encourage you to refresh yourself with the instructions on Form 2290 if you encounter this. I also saw in the question, why do logging vehicles get a reduced rate? Presumably, logging vehicles are going to operate a portion of their mileage on logging roads or on roads that are non-public highways. So they are allocated a reduced rate. As I had mentioned, I think it's beneficial if we quickly cover agriculture. I'm sorry to interrupt you. If we quickly cover agricultural vehicles. So primarily, the concern with agricultural vehicle is as it relates to the 7,500 mile limit for tax suspension. So a vehicle that is considered an agricultural vehicle is any highway motor vehicle that is used or expected to be used primarily for farming purposes. And again, like logging vehicles, an agricultural vehicle must be registered under state law as a highway motor vehicle used for farming purposes. So it's a specific designation with the state registration. I will add that the mileage that these vehicles travel on the farm is not counted towards their 7,500 mile limit. Continuing, a vehicle is used primarily for farming purposes if more than half of the vehicle's use based on mileage during the period is for farming purposes such as transporting a farm commodity to or from a farm or use directly in agricultural productions. So certain activities that would qualify would include cultivating the soil, raising or harvesting any agricultural commodity, clearing land, repairing fences and farm building, building terraces, irrigation ditches, cleaning tools or farm machinery, and painting. But it is important to distinguish that a vehicle will not be considered used for farming purposes if it is used in connections with operations such as canning, freezing, packaging, or processing. And just to finish this up, a farm commodity means any agricultural commodity, feed, seed, fertilizer, livestock, bees, poultry, what are some other fur-bearing animals or wildlife. A farm commodity doesn't include a commodity that has been changed by processing from its raw natural state. So an easy example is juice extracted from fruits or vegetables is not a farm commodity for purposes of tax suspension. Again, there's a lot there. I'll refer you back to the 2290 instructions if you have further distinction to make for your specific client, or if you're trying to decide if your vehicle is either a logging vehicle or an agricultural vehicle.
Brian, so glad we have you here as the SME. That is a great explanation and separation between the logging vehicle and the agricultural vehicle. Brian, we have some questions from participants about refund of tax, and I'm going to group two together because there seems to be, it goes together. One participant is asking, are there any provisions for a refund of tax? And another is asking, can I claim a refund of tax if my truck's taxable GVW has decreased during the year? So two questions there.
A two for one. So the first question, are there any provisions for refund of tax? Yes, there are. However, they are limited. So the only provisions for refund or credit for a prior tax paid is if a tax paid vehicle, that's key, right? The vehicle has to have been tax paid. If a tax paid vehicle is stolen, if it is sold, or if it is completely destroyed during the taxable period. So there's also provision, as we've been discussing, for a credit or refund if a tax-paid vehicle does not exceed the mileage limitation for the taxable period. So there are provisions for credits or refunds, but it's limited to vehicles that are sold, stolen, or destroyed, or vehicles that do not exceed the mileage limitation for the taxable period. as a segue to the next question was whether or not the person can claim a refund of tax if a vehicle's taxable gross vehicle weight was decreased during the year. The answer is no. A credit isn't allowed for an occasional light load or a decreased load or things like discontinued or change of use of the vehicle. Again, the credits and the refunds are only allowed for vehicles that are sold, destroyed, stolen, or used under the mileage limitations for tax suspension. There are no other provisions for refunds like, for example, reduction in taxable gross weight, a termination of an owner-operator lease, or if you begin using the vehicle less frequently.
Thank you for that clarification, Brian. Someone wants to know, wants you to answer this question. He filed a Form 2290 through an e-file provider, and the payment has been withdrawn from my account, but I have not received my watermarked Schedule 1. How do I obtain this Schedule 1?
I'm going to compliment this person and say that e-filing is absolutely the best way to do this. I would encourage that over paper filing regardless of the number of vehicles that you have. In this case, the person should first contact the e-file provider directly and ask if they can provide you your watermarked Schedule 1. And your Schedule 1 is your listing of vehicles with your VIN and the weight category, if you recall. If the e-file provider cannot provide the Schedule 1, which would be rare, but if they can't, you can fax a request to the IRS. And if you have to go that route, you should go to the Form 2290 instructions or the Trucking Tax Center website on how to do that.
Great, thank you. We have a question from a tax preparer, wants to know, how do I become a Form 2290 e-file provider?
Great question. So you will go to irs.gov, and we have a segment in there on become an e-file provider. And you'll go through the application process and be evaluated and then approved as a 2290 e-file provider. And then you'll be listed on irs.gov as one of our e-file providers for the Form 2290.
Awesome. Someone wants to know, what if a vehicle's VIN is less than 17 digits? How do I enter the VIN on the Form 2290 Schedule 1?
That's an interesting question. So VINs are standardized now at 17 digits as a requirement. In theory, you could have a vehicle with the VIN that is less than 17 digits if the vehicle is older or maybe it was manufactured in a foreign country. It could be possible, although rare. If you encounter that situation, it's very important that you enter zeros preceding the VIN so that the VIN equals 17 digits. So you put zeros preceding the VIN so the VIN's 17 digits, and that's important because your Form 2290 will likely receive a rejection error if you list the VIN as less than 17 digits. So if you have one that's less than 17 digits, it's crucial that you would add zeros before it so that it appears as 17 digits on the Schedule 1.
Thanks, Brian. Makes sense. Leading zeros to make up the 17 digits. An attendee wants to know, let's see here, my clients are based in Canada and Mexico, but drive tractor trailers on roads in the United States. Do my clients need to file the Form 2290 if they are not based in the United States?
Okay, so we have clients in Canada and Mexico entering the U.S. to drive their tractor trailers on U.S. roadways. So if these vehicles are over 55,000 pound taxable gross weight and they are driven on roads in the United States and they are registered under a foreign country, i.e. Canada or Mexico, then a Form 2290 would need to be filed to report these trucks. So the Form 2290 has specific instructions about foreign-based carriers needing to pay the highway use tax and file Form 2290. So most likely the answer is yes, these vehicles are going to be subject to the Form 2290 filing requirement if they're over 55,000 pounds, if they're driving on the U.S. roads, and if they are registered under the laws of Canada or Mexico.
Okay, got it. Another question here for you. Can I file a consolidated Form 2290 for multiple entities?
Also, another interesting question from what I presume to be one of our paid preparers. For income tax purposes, you can file a consolidated return. For excise tax purposes, i.e. the Form 2290, you cannot file consolidated returns. So each entity that has its own EIN must file and report their own Form 2290 under that EIN.
Brian, what vehicles would fall under Category W, tax suspended?
Let's say, for example, a highway motor vehicle such as a tractor-trailer combination or a dump truck could be listed as Category W, which is our tax suspended category, Category W, if at the time of first use of such vehicle on public highway during the tax period, it is reasonably expected that the vehicle will be used for 5,000 miles or fewer on public highways during the taxable period. And remember, we have the 7,500 mile limit for agricultural vehicles. So it would be a vehicle that's going to operate on public roadway, but it is reasonably expected that it will not exceed the mileage limitations during the entire taxable period.
Awesome. Follow-up to that, Brian. How do tax suspended versus tax exempt differ?
Tax suspended is distinguished from an exemption from tax. The two are separate, as the person asking the question had diligently notated. A tax suspended vehicle is a taxable highway motor vehicle that is expected to travel on public highways less than the mileage limitation during the taxable period. And thus the tax payment on that taxable vehicle is suspended. Tax suspended vehicles, Category W, are reported on Form 2290 Schedule 1. Right? You report them on Schedule 1, Category W. That's distinguished from an exempt vehicle. So an exempt vehicle is either not a highway motor vehicle, or it's a highway motor vehicle operated by an exempt user. Remember the federal government, District of Columbia, volunteer fire departments, etc. Those vehicles are not subject to tax or required to be reported on a Form 2290. An example of an exempt vehicle could again be our mobile job site crane, whereas another example, our exempt user could be the National Red Cross for their blood collector vehicles.
Awesome. Let's see here. Another question for you. Does the Form 2290 have to be filed monthly or annually?
We see a lot of these questions come in, so thank you for this question. The Form 2290, it's an annual return. The tax period's from July 1st through June 30 of the following year. Form 2290 must be filed by the last day of the month following the month the vehicle was first used on public highway during the taxable period. If the first use occurs after July, then you would use the partial period tax tables in the Form 2290 instructions to determine when to file Form 2290 and how much tax to pay. And as Christopher mentioned, keep in mind, like your homeowner's insurance, the Form 2290 tax is prepaid.
Prepaid. Awesome. An audience member is asking, how is the 55,000 pound weight determined? Is it determined by the gross vehicle weight on the sticker inside the vehicle's door jamb, or is it the weight registered with the state, or is it another way that you do the determination?
The taxable gross weight for 2290 purposes is not based on the gross vehicle weight rating as assigned by the manufacturer that would be listed on the sticker affixed to the door jamb of the vehicle. If we're talking about taxable gross weight for vehicles other than buses, we'll just refresh ourselves that it is the total of the actual unloaded weight of the vehicle fully equipped for service. And I did see someone ask, does that include fuel in the weight? The answer to that is yes, because you need fuel to be fully equipped for service. You have the actual unloaded weight of the vehicle fully equipped for service plus the actual unloaded weight of any trailers or semi-trailers fully equipped for service that are customarily used in combination with that vehicle. And then you have the weight of the maximum load customarily carried on the vehicle and any trailers or semi-trailers customarily used in combination of the vehicle.
Brian, we have some great questions here, and I'm so thankful that you're here to answer them for our attendees. Here is another. Is everyone who drives a commercial truck required to file the 2290, whether they have 1 or 100 trucks?
Form 2290 and the filing requirement is not based on any number of specific vehicles that a person or company operates, whether that be 1 or 100. So you must file Form 2290 in Schedule 1 for that tax period that begins July 1st and ends in June 30 of the following year if a taxable highway motor vehicle, and it could be just one, if a taxable highway motor vehicle is registered or required to be registered in your name under state, District of Columbia, Canadian, or Mexican law at the time of first use during the period. And again, if the vehicle has a taxable gross weight of 55,000 pounds or more. So there's no specific number of vehicles that requires a 2290 filing. It begins with 1.
Thank you. After the initial filing of Form 2290, does the Form 2290 have to be filed each year if the truck is still on the road?
It does. If the vehicle has a taxable gross weight of 55,000 pounds or more and it is used on a public highway in the U.S. during the annual taxable period, Form 2290 must be filed by the due date each year.
Got it. Question. Since this is an annual form, if the truck was purchased from a dealership and put into use in April 2025, do we file a Form 2290 by May 31st?
Let me think about that for a moment.
Put into use April 2025.
Okay, so the person purchased the vehicle from a dealership in April 2025, and they want to know, do we file Form 2290 by May 31st? And so the answer to that is yes. If you did purchase and use that vehicle on a public highway in April 2025, the due date for the 2290 would have been May 31st. However, you would only report and pay a partial amount of tax to cover you through the end of June 2025. So that partial amount of tax represents the months of April 2025, May 2025, through June 30 of 2025. And again, we would use our partial period tax tables from the instructions. If we carry that forward, so we purchased this vehicle and started using it in April 25, we paid the partial period for April, May, and June, and now we're going to continue to use our vehicle in July of 2025, then a separate full period Form 2290 and payment would be due by August 31st. So this will represent the full year of tax for the taxable period of July 1st, 2025 through June 30, 2026. So in that scenario, they'd have two 2290 filings, one for the short period of April, May, June, and then they would have their entire annual period if they were using that vehicle in July.
Got it. Does the 55,000 taxable gross weight for vehicles include both the semi-tractor and a trailer as one unit?
It does. If you recall, we compute that based on the actual unloaded weight of the vehicle fully equipped for service plus the actual unloaded weight of trailers or semi-trailers customarily used with that vehicle. So the 55,000 taxable gross weight does include the tractor and the trailer combination.
Got it. Question for you again. If the first use of a vehicle on a public highway during the taxable period in August 2025, when is the Form 2290 due by? And when would we file the next Form 2290 for this vehicle?
Okay, let me break that down for a moment. So the vehicle is first used in August of 2025. When is that Form 2290 due? So if the first use occurs in August 2025, Form 2290 reporting tax up through June 30 of 2026, and that associated payment would be due by September 30, 2025. And because the first use occurred after July, you would use the partial period tables as it pertains to August. So that's due by September 30. If we would continue that forward and the use continues that next year in July of 2026, then the Form 2290 for the next period, July 1, 2026 through June 30, 2027, along with that payment would be due by August 31st of 2026. We had the short partial period first year, and then we have the full period the next year.
Thank you for that calculation. Another audience member is asking, I only own one taxable highway vehicle that is registered in my name with a taxable gross weight of over 55,000 pounds. Can I file Form 2290 electronically even though I have one vehicle?
That's a fast answer, and it is yes, and I would encourage you 100% to e-file that one vehicle.
Awesome. Does the name on the paid 2290 have to be the same name as the owner?
All right, I saw this question, and I saw a related question. I'm going to lump those two together. So the first question here is, does the name on the paid 2290 have to be the same as the owner of the vehicle? And the answer is not always. So Form 2290 has to be filed if the taxable highway motor vehicle is registered or required to be registered in your name under state or District of Columbia, Canadian, or Mexican law at the time of first use. So you may be an individual, limited liability company, a corporation, a partnership, or any other organization, but the person responsible for filing Form 2290 and paying tax is the name that appears as the registrant on the vehicle registration. You may commonly hear vehicle registration referred to as cab cards. So it would be the name on the cab card or the vehicle registration is the name that needs to be on the 2290. So it's not always going to be the owner because the owner might not be registering it. And the related question I wanted to tie that to was, does the name you file your 2290 have to match the registration name of your vehicle? And that answer is yes. Because again, since the person liable for the tax is the person or entity whose name the taxable highway motor vehicle is registered or required to be registered by, then that person would be required to be on the cab card and on the 2290. Those two would match.
Thank you, Brian. Audience, we have time for only one more question. One more question. Can a Form 2290 be amended to report additional tax or to report tax due on tax-suspended vehicles exceeding the mileage limits? The last question, Brian. Thank you.
All right, I'll give you a twofer on this one. So the first one is, can the 2290 be amended to report additional tax or report tax due on a tax-suspended vehicle that has now exceeded the limits? And the answer is yes. You want to make sure that you use the correct Form 2290 for the tax period that you are correcting. You want to make sure that you check the amended return box only if you're reporting additional tax from an increase in taxable gross weight or if you're reporting a suspended vehicle that exceeds the mileage limitation. Similarly, if you need to correct a VIN number on Schedule 1, so you reported your Schedule 1 and then you catch a VIN error later, you can also amend your 2290, but you want to make sure to check the correct VIN correction box, and you will attach a statement with your explanation of your correction.
Awesome. Thank you so much, Brian. Audience, that's all the time we have for questions. I want to thank Brian for answering your questions and sharing his knowledge and expertise today. Audience, we cannot leave without one final polling question, however. Let's get you that polling question so that we can get out of here. Our last polling question is simply an attendance check, so please select the radio button on the screen. If you do not receive the polling question, add only the letter A as your response in the Ask Question text box to timestamp your response. Audience, please remember that you need to answer at least 4 polling questions and participate in the live broadcast from the official start time for at least 100 minutes to earn 2 IRS CE credits. The polling question example we did at the beginning of this presentation counts towards the requirement. I'll go ahead and give you a few more seconds to select the radio button or submit in the Ask Question feature. Okay, we're going to stop the polling now. Thank you for responding and participating with the polling questions. Before we close out today's session, however, Jeff, can you share some key points you want the audience to remember from today's webinar, please?
Sure, Marcia. So first, you file Form 2290 to pay the heavy highway vehicle use tax for each taxable vehicle weighing 55,000 pounds or more. And while the IRS recommends e-filing Forms 2290 for all taxpayers, it is mandatory if you're reporting 25 or more taxed vehicles. Now, by using e-file, you can receive an IRS watermarked Schedule 1, an IRS receipted watermarked Schedule 1 within minutes. There's a list of participating commercial software providers available at the IRS Trucking Tax Center. You want to select the software provider that best meets your need. The services offered and fees charged by the software providers differ, but you must use one of the participating commercial software providers. Follow the prompts to complete, sign, and e-file your Form 2290. You can't e-file the Form 2290 on irs.gov. Now, for most people, the deadline for filing a full year Form 2290 is August 31st. You can visit the Trucking Tax Center at irs.gov, which is irs.gov/trucker, for a link to a chart showing the 2290 filing deadlines. If the due date falls on a Saturday, Sunday, or legal holiday, you want to file by the next business day. And if you need more information about the heavy highway vehicle use tax or information on e-filing 2290 and the Schedule 1 that goes along with the Form 2290, best place to find that information is the Trucking Tax Center, which I mentioned earlier, irs.gov/trucker. And I think that touches on most of the key points that we covered today. So Marcia, I will hand things back over to you.
Thank you, Jeff, for those key points. Audience, we're planning webinars throughout the rest of the year. To register for upcoming webinars, please visit irs.gov, keyword search webinars, and select the webinars for tax practitioners or webinars for small businesses. When appropriate, we will offer certificates and CE credit for upcoming webinars. We invite you to visit the IRS YouTube page at www.youtube.com/IRS videos. There you can view available recorded versions of our webinars and other key video messaging once posted. Again, CE credits or certificates of completion are not offered if you view an archived version of any of our webinars. Another big thank you to our presenters, Jeff and Chris, along with our subject matter expert, Brian, for today's great webinar. I also want to thank you, our attendees, for attending today's webinar, Understanding Form 2290, Heavy Highway Vehicle Use Tax. Again, if you attended today's webinar for at least 100 minutes after the official start time and you answered 4 polling questions during the live broadcast, you will receive a certificate of completion for 2 IRS CE credits. Or if you attended for at least 50 minutes after the official start time and answered at least 3 polling questions during this live broadcast, you will receive a CE credit for a certificate of completion for 1 CE credit. Remember, the polling question counts. Audience, it is important for us to know that the certificate of completion will be emailed to the registration on file. If you qualified for IRS continuing education credits for the webinar and registered with your valid first name, last name, and PTIN as it appears in your IRS PTIN account, your CE credit will be posted in your IRS PTIN account. And for those of you eligible for continuing education credit with the California Tax Education Council, your credit will be posted to your CTEC account. If you qualify and you do not receive your credit by August 11, please send us an email to the email address posted right there on your screen. Thank you so much, audience, for coming and turning out to this presentation. It has been a pleasure to be here with you today on behalf of the Internal Revenue Service and our presenters. We'd like to thank you for attending today's webinar. Thanks again for your time and attendance. We hope you found this helpful. You may now exit the webinar at this time.